So today we're going to talk to Marianne about certain words that she might have heard us say in the office that she probably didn't understand. So we want to break down these words and let her know what they're for. So first one, in French, spéculation. So speculation. What is that?
You're trying to guess something?
So that's pretty good. So we're close. Okay, so
Speculating.
speculating, faire de la spéculation, c'est acheter ou vendre quelque chose. So it's buying or selling something with the idea of what it's going to do down the road.
Okay.
Whether that future is a little bit closer or later, you're still speculating. Fait que tu spécules qu'un prix va soit monter ou descendre. So it's the act of buying or selling something with the idea that that certain thing that you're buying is going to move in a way that you're trying to predict. So that's speculation. What's a stock?
Okay, that one I think I know, but I'm not sure if I do.
Try. On lui a demandé c'est quoi
So
l'action.
it's like a part of a company you're buying, like kind of like the right to like be part of it.
So that's not far. When you own a stock, is you own a right to the capitals of that company. So it's pretty much what you said. You own a part of it, but you also, when you have that part of that company, you're assuming the risks and the benefits. So if the company goes down in value, that share that you own will go down. But if that company is profitable because you own a percent, like one stock of their capital, if that company does well, so does your stock. So you were right. Good. You get a high five. All right. What's a dividend? All right, dividend, c'est cool.
Okay, I should know that because I think it's not only about investing but also like life, but I don't know.
Okay, so a dividend is when certain companies, the shareholders meet. So we just mentioned what a stock was. So now a dividend is when these shareholders meet and the company does well, the company may choose to give the shareholders back some of those benefits, and they do that through a dividend. So if a company does well, and it's the shareholders vote on this, and some companies don't even do this, but some companies do issue a dividend that they give back each quarter to their investors.
Like kind of utilities? Is that-
Coca-Cola, for example. Coca-Cola pays out a dividend. So it's their way of giving profits to their shareholders.
Okay,
It's a way of doing that.
nice.
And it's a good way also to get loyal shareholders.
Okay.
Because some people will only buy stocks for dividends. Now imagine you own 1,000 shares of Coca-Cola, and let's say Coca-Cola pays you, they would never do this, but let's say they give you a $10 dividend for every share,
Okay.
and you own 10,000 shares in Coca-Cola. So 10,000 times 10,
Okay, nice.
that's a lot of
That
money.
would be cool.
It would be great, but that's what a dividend is. A dividend is you getting that, and that's why some people buy these stocks with dividends, because they're sort of banking on that money that's always going to come in.
Even if the company doesn't do great, or like it
Well, if the
depends?
company doesn't do well, and they can lower their dividend, just like they can cut it at any time. So there's always that risk when you're buying stocks. A company may cut its dividends.
Oh, okay.
So it's an added feature that the shareholders vote upon, but it's a feature that they can take off the table whenever they want. What's a bond? C'est quoi une obligation? Okay.
Nope.
Okay, so a bond is a debt. So it's like you, for example, Marianne Company, you want to sell me $100 worth of debt. So you're gonna say, hey Louis, can I borrow $100? So I'm selling you my debt, and on top of that, I will pay you interest to thank you of buying my debt. So I'm telling you, it's like a way of me loaning you money, but you're paying me a certain percentage to say you can trust me.
Okay.
So a debt is une obligation, c'est un produit C'est le fait qu'elle elle vend une dette, moi j'y prête de l'argent. Puis il y a peut-être un coupon, like there's a coupon, for an interest percentage, where I'm gonna make money. Now that coupon or that interest, if you will, is either annually or biannually. So you would pay me, let's say 5% twice a year on $100.
Okay.
But it's a way for you to get money quick. So an obligation, when you're buying an obligation, a bond or an obligation, it's sort of a way to get money quick. But by paying people a little bit of an interest
Like
rate.
a loan?
Yeah, a loan if you will.
Okay.
Okay. What are commodities? C'est quoi des matières premières?
Matière première?
Ouais.
Oh, I know that. But you're buying like the
Okay.
basic
We're
thing you're buying?
still in the stock, the sort of trading environment. Okay, so matières premières, or commodities, gold, silver, they're physical assets. Even oil, they are physical assets that you can actually trade. So you could trade gold, you could trade silver, you could trade oil, you could trade all these things. You can even trade lumber, what we build our floors with, what we build. You could trade a lot of these commodities, beaucoup de ces matières premières là, on peut les transiger. The difference is, when you're trading these in the market, you're trading large portions of it. So it's a little bit bigger. So instead of when you're trading gold, you're actually trading a ton of bullion. So it's a lot larger. And those you trade on commodities exchange, which we'll get to later.
Okay.
Okay. What's a futures contract? Un contrat à terme, c'est quoi?
It's like investing long term, like you're.
Okay, so a futures contract, it's okay, but this is good, you're learning these
Yeah,
things.
it's fine.
So un contrat à terme, c'est quand tu achètes quelque chose dans le futur. So it's buying something later. So, for example, corn is a commodity. Okay, everyone knows corn. You can actually buy the corn crop for the month of March.
Okay.
So
yeah.
I can buy it. So the seller of that corn crop in March will put a price on it. He'll say, I can sell it at, let's say $10. It's a lot more than 10, but let's say $10. So I can speculate and buy that month. So his corn in March, I can buy it at $10 from him because I think that in March it's gonna be very hard to get corn, and the price, it might be actually worth $14 or $15. I can do that. You could trade something in the future.
Okay.
And there are so many factors that go into this because, so let's say corn, the weather goes into that. You know, if it's a good year, if it's a bad year, is there gonna be a lot of rain? Is it gonna be a dry
Right.
season?
Yeah.
That's it. So if somebody wants to sell me corn at $10, and I think it's gonna be worth a lot more because I'm looking at the earth completely, and I think that it's gonna be a bad year for crops and growth. You know, if I find $10 really cheap price, then I'm willing to pay that. So
But you buy it for the actual price? Like if it's $10 right now, but do you think it's gonna be 15 in March?
so
You pay $10.
I pay $10
Okay.
because we have both agreed, myself and the seller of those contracts in March, we have both agreed that he thinks it's worth $10. So if I think the corn is going up, I can buy it at $10.
Okay.
Now, what is the foreign exchange market? The Forex market.
I heard of it everywhere. I kind of think it's like a more international market,
Yeah.
but I'm not sure like what includes.
So the foreign exchange market, you could trade currencies worldwide. It's a 24/7 market. It's a hard market to trade because some of these currencies, we live in Canada, might wake up earlier than we do.
Okay.
So for you to catch the news or to predict certain moves means that you have to be awake. So it's a little bit of a harder market to trade because you have to watch your cell phone or your computer a lot more often than you probably would like to, but that's what the foreign exchange market is. It's trading currencies. You could trade the Australian dollar versus the New Zealand dollar, Australian dollar versus the Canadian dollar. All these pairs are possible.
Okay.
All right. Now, the other one now. let's go for what's a central bank? Une banque centrale, c'est quoi?
So it's the main bank of every country that like
That's
is in
great.
charge.
That's great. Ça, c'est une bonne réponse. Like une banque centrale, a central bank is the central establishment of that country that actually creates money and also deals with the politics around that money and enacts monetary policy. So for example, Bank of Canada is a central bank. Bank of Japan is a central bank. Bank of Mexico is a central bank. And in the US, the Federal Reserve is a central bank. So all these big banks or central banks, if you will, they manage monetary policy for their countries, and they also print money.
Okay.
So essentially, that's what they do. Now, we just mentioned the Fed, which is the Federal Reserve. So whenever you hear the word Fed, that is the US Federal Reserve, which is their central bank. Now, this we've actually went through, so I want to see if you remember this one. What is a broker? C'est quoi un broker?
Okay, so it's someone who's in charge of trading, basically.
Okay, you're not too far from it. So
Oh wait, no, like an in between.
there you go.
Yeah.
There you go. Okay, so perfect. So you have a courtier. A courtier, which is the person. So Wealth Simple is a courtier. It's something or a tool that gives you access to the market. Now the broker is someone you call or someone that you're in touch with, which will let you execute transactions for you. You actually go through a broker, but he's a middle person. He's a middleman, if you will. So that's a good answer. That's great. What's capital?
Money.
That's a good answer. That's a great answer. So if you go in your Wealth Simple account, you saw that your account is worth $140. That's your capital.
Okay.
So you have $140 in capital. So whether your capital is invested into stocks or shares or crypto, or whatever it may be, the totality of that is your capital.
So if you have like a house and a car and like that counts too?
Yeah, those are capital assets. Those are assets and they are worth capital. Now, what is a position?
That I don't know.
Okay, it's super easy. So you have 8 shares of Guru. That's a position.
Oh, like where you're standing in a company? Or
Yeah, that's a position. So you could be long a position. Long means that you own it. And you could be short a position. Means that you can actually sell something you don't own.
Okay.
And your position, how you stand on that product, that's a position.
Okay.
So whatever you see in your account, so it said 8 shares of Guru, that's your position.
Okay.
And your capital is the whole worth of that position. Now, what is leverage? Effet de levier, c'est quoi?
Leverage. Yeah, like give up.
Okay, let me help you out. So when you're trading foreign exchange, for example, some brokers will give you, or some platforms will give you a leverage effect, meaning that I can put $100 and they will let me leverage my money up to 100 times. Let's say I put $100 in my Forex trading account with Oanda. I use Oanda, j'utilise Oanda, c'est la plateforme que j'utilise pour le Forex. If I put $100 in there and they give me 100-to-1 buying power, they let me leverage my money 100 times. So if I have $100 and they let me leverage it 100 times, how much is that? 100 times 100?
1,000. Okay.
That's 1,000. So it means that I could buy $1,000 worth of whatever.
Oh, okay.
So that's the effect of leverage. So some of these platforms will let you do this. Also, some products when you're trading will also let you do this. So for example, options. So we mentioned stocks. Now we have options. So options is a little bit more complicated, but options are, you can buy the right to buy or sell something.
Okay.
You can actually buy that right. So options are rights. You can do something and do something else. If I own shares in Guru, you can actually buy options to buy at a certain price. So it's sort of like future contracts, but in the today. And options are, you can have them weekly, you can have monthly options, but options give you the right to buy or sell products. Options, they give you a leverage power. So one option is worth 100 shares. So, and options are a lot cheaper to buy than shares. So let's say Tesla.
Okay.
One share of Tesla is worth, last I checked, is worth $700. Let's say you don't have $700, so you can't buy a share, let alone buy 100 shares, because 100 shares times 700. So you could buy one option, so a call option. Call means that you can buy the right to buy something at a certain price. So I could buy a call option on Tesla at $700, and if that call option is, the price to buy it is, let's say $100, well, I can buy the right to buy, if Tesla reaches $700, you can buy that for $10.
Okay.
So it's complicated, but what I'm trying to say is that I can actually leverage my money. I bought an option in Tesla, I paid $10 for it, but it's like if I owned 100 shares. Without me having to actually put $70,000 to buy 100 shares.
Ain't that what banks do?
No.
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 Okay.
But it's close though. It's close. It's just it's a leverage tool.
Oh, okay.
It's something that lets me do a lot more. But also, if I'm leveraging that much, remember I'm paying $10 to buy something at $700. So let's say a call option, like I said, is the right to buy something at $700, let's say next Friday. If Tesla goes under, well, I could lose, my call option will be worth nothing, zero. So I will have straight up lost money. Now, if Tesla goes next Friday, because that's the expiry, goes over $700, and it's worth, when I bought it's $10, but now Tesla is at $710, on that Friday, I can either buy those shares of Tesla and sell them right away at a profit because I bought them at, let's say I bought them completely at $70,000 and I sell them at $71,000, I made a $1,000. Well, that option will also grow in price if Tesla goes over $700. So if Tesla goes to $710, my option that was maybe worth $10 could be worth $20. And I could sell it, make that money, and never have to actually buy or use $70,000 worth of capital. So options let me leverage. It's a little complicated, but we'll get back to it. We'll get back to it.
Sounds complicated, yeah.
But all this to say that you can leverage products. You can leverage your own trading account. The only thing that matters is margin. What's a margin?
How much are you willing to earn or lose? To
Okay.
sell or lose?
Okay, so a margin is a little bit more complicated than that. Okay, so a margin is when you open a margin account. So you open through Wealthsimple a cash account. Okay, so a cash account means that you have to buy whatever you're buying, you're spending all your money on. Now, if you had a margin account, certain products, your bank or the broker where you open your account won't ask you to use all your money to buy.
Okay.
They will give you, because they're in a sense, they're loaning you money, if you will. So let's say Guru, which you bought. Let's say you put $1,000 in your trading account and you open a margin account. Let's say Guru is worth $15 and you want to buy 100 shares of Guru. 100 shares would mean 1,500, right?
Okay, yeah.
Okay, so you bought 1,500. You bought your 100 shares of Guru. It's worth 1,500. Well, a margin account lets you not put the whole money to buy it.
Okay.
Your broker might actually only ask you to put 30%. Let's do the math, okay? So it'll help you out. So this is where it gets fun for margin. Okay, so Guru's worth 15 times 100, it's 1,500. Now, like I said, certain places where you open your account, they might let you have a margin account.
Okay.
So if we take the Guru example, you buy 100 shares of Guru at $15, that's 1,500. If the margin rate on Guru, your broker says put you only have to put 30%. Well, out of that $1,000 that you put in initially, for those 100 shares, it's only costing you $450. So that means that you have $550 left
Okay.
that you can use.
So you kind of earn it? Like you never spend it? But
No, because you're buying those shares on margin.
Okay. Okay, that's complicated.
It seems complicated,
Yeah.
but certain places will let you open a margin account if you have a good credit, if you're a good trader, if you have enough money. And they're not going to ask you to put the whole money because it's not a cash account. So they're not going to tell you put $1,500. They're going to say, listen, but they're charging you for the money that they're loaning you to buy to finance the rest.
Okay.
So you're paying an interest, you're paying a fee on that margin that you're using. But it's best if you have tons of money in your account and you can cover whatever. But if you're buying things on margin, that's a possibility. It just means that they're loaning you money. They're putting up for you the 70%, but they're only asking you to put 30%.
Yeah.
Now, let's say you've used all of your accounts. So that $1,000, you spent all of it. And since you've used margin, you've bought the maximum that you can with the leverage that they're letting you use. Let's say you have $0 left.
Okay.
Zeros, because you have 100 shares of Guru. Let's say you have 300 shares of Guru. You're putting 30%. You only had 1,000 in your account. That 350 here, you would have to put it up. They would say pay the difference. So they're loaning you money essentially, but they're saying always make sure that the money we're loaning you, the margin, is always under control.
Okay.
So let's say you bought 200 shares of Guru at 15. It's $3,000. You put 30%, $900. So they're only asking you to put $900 to buy 200 shares of Guru. Now let's say Guru, the price goes down to $13.
Okay. And if you lose, and they lose because they put like part of it,
So if you're losing money,
you own them.
no, if you're losing money because Guru goes down and you bought it on margin, they're gonna call you. They're gonna do what's called a margin call. They're gonna call you and they're gonna say, hey, Marianne, put money in the account or sell half of your Guru shares.
Oh, okay. So basically you lose, right?
Yeah,
They're not like gonna charge you for losing.
Well,
Like-
remember, they're already loaning you a percentage of the
Yeah.
money, so you're not putting up the whole 100% of the money to buy the shares. So they're loaning you essentially capital to buy those shares.
Yeah.
And if Guru goes down in price, if you use all your margin, they're going to call you and they're going to say, hey, either send more money to your account to cover your margin and put it back at zero flat,
Yeah.
or sell your shares in Guru, take your loss.
What happens if you earn and you want to sell it?
You can.
Oh, and then they get something out of it?
They're
They
charging
get-
you a fee for the margin, regardless. They're charging you a fee.
Okay.
So that doesn't matter. But you can make money off of the money that they're loaning you.
Okay.
Yeah.
Oh, cool.
So that's it. So margin accounts are great. They help you leverage, especially if you're trading even more leverage products. They're super fun. They're a way to trade a lot without putting a lot of capital, but you have to make sure that your margin requirements are always in order. Because if they're not, they're going to call you. They're going to say, sell things or send me money.
Okay.
So that account was not available in the Wealthsimple app. More sophisticated brokers will let you have a margin account.
Okay.
Experienced traders use margin accounts all the time because again, it's a way for them to leverage their money. Remember, you just bought 200 shares of Guru, which should cost you $3,000, but you're only putting $900 worth. I would, in theory, since you put down $1,000, there's still $100 that I could use to buy more shit,
Okay.
more great products. If it goes down, I have to put money. If it goes up, great. I can even withdraw money on the margin.
Okay. So if you earn above the margin, you can take it out.
Yeah, of course.
Okay.
It's great.
Nice.
So those are simple trading terms that'll maybe help you when we're talking around here. They'll give you a little bit more of an idea what we, especially the things that we say, but essentially those are some good ones to remember. We'll
Yeah.
do some more ones next time.
Yes.
Prochaine fois, on va
Yes,
faire
please.
d'autres termes. On a parlé de quelques termes de trading, mais sérieux, à la base, position, capital, effet de levier, banque centrale, Fed, broker, courtier, position, stock, c'est toutes des choses qui sont importantes à savoir. Fait que, si jamais ça vous intéresse, écrivez un commentaire, faites-nous des suggestions, on va vous donner la définition, on va vous donner des exemples. We will give you definitions, examples, help you understand these terms. Again, if you have questions, ask away. Thanks guys, have a good one.